Everyone's always going to try to compare each other's journeys. Like, okay, you know, like people who watch the podcast, they're gonna be like, okay, this trader does this trader does this, and there's just so many different ways of trading. What that should show everyone is just like, once you find what works for you, just need to stick to that. Because if you try being like someone else, it's never gonna work. A lot of people don't do this a lot, but I trade the 1 minute time frame. So I basically look for a higher time frame narrative that could be on the daily or hourly. Depending on if it's on the daily or hourly, I'll move on to the 15-minute time frame and I'll look for fair value gap because I trade IRL to ERL. And then once it does that, I drop onto a 1 minute time frame, and then I look for SMT and an order block to form, and then I take it from there. A lot of times what a lot of people do is they'll enter a trade and they'll be like, okay, we're trading into this fair value gap. They just set a limit order, and the next thing you know, it knifes right through it. I always wait for a reaction to happen before I ever even enter a trade. I think with prop firms, kind of a hot take, if it's not done correctly, it promotes gap, because people will be like, okay, I can buy this account, blow it, buy another one, blow it, buy this one, blow it. They need that sort of degeneracy, and that's how they promote it as well. If you're not super careful with that payout to fee ratio, you're gonna end up being the person who's keeping these prop firms alive.
And if you were to do it all again, start again, and starting this year, would you take a similar approach that you did, or would you go straight to prop firms?
People are gonna hate to hear this, but like,
we have made it to NYC, and we are joined by the wonderful man Shinobi. Umar introduced us, so we've connected, and yeah, we're gonna make some magic today. So Shinobi, for those of you that don't know you, well, it's a stage name, so I'm gonna break the ice right there. The name will stay a mystery. But yeah, if you can just quickly summarize what kind of a trader you are, just for those that don't know you, and what kind of style you have.
Yeah, so I mean, I started off mainly as an options trader. I started off in 2019. I started off trading shares and then slowly got introduced into options right away. And I'm making the switch over to futures mainly in 2024. My whole goal is to like switch into futures overall. And yeah, so I mean, I trade smart money concepts like every other person now, but I'm also trying to pick up on things that Umar does, you know, with the order flow and things like that, but he's just on a different level, you know. I tried it so many times, but I'm just like, okay, I'm going to keep it on the back burner and keep trying to learn it, but I literally was not making any money off of it, and that's not anything against the strategy. It's just I just don't have an eye for it like he does, so I've just been sticking to my smart money concept stuff and just trying to learn his things on the side.
When it comes to SMC, obviously it's a very known strategy, and a lot of people are subscribed to it. But most people, to my knowledge, are utilizing an FX, SMC within the forex markets. How is that transition taking SMC? I think ICT is actually doing it within the forex markets, transitioning that to the options stocks and futures.
I mean, I guess it works the same way on futures as it does forex, right? I mean, even with options, I mainly only trade SPY and QQQ. So it's just coming down to charting on NQ and ES. So it really doesn't make that much of a difference either. I've never really tried it on like lower to mid cap stocks, trying SMC on there. I just don't think it would really work. But yeah, I mean, just for my trading style, it works pretty well just on futures. I never actually even traded forex. Like, I had no idea until Keyflow, he's sitting over there. He introduced me to SMC concepts in 2021. And at that time, I remember when I first started with them, I was like, yo, this is bullshit. Because I was already profitable back then. But it's like my strategy then was just so completely different from what it is now. When I was trading the concepts then, I was slapping every fair value gap, every one of this. And I was one of the first people in the options trading community, me and Keyflow. And I stopped trading it and I started talking shit about it just because I just had such a hard time grasping like there's a model you follow compared to like when I would just trade, you know, key levels and supply and demand. And
so previously, what was your strategy before you transitioned to SMC?
Supply and demand.
And why did you transition?
Because with supply and demand, it was always, I would have zones ready. Like, my zones are really fucking good, and I would be able to trade them, but it was really hard, like, when people would ask me, okay, you drew out this zone, how do you know what zones take, what not to take? How do you know if it's high probability or low probability? And then I started getting introduced into order blocks. And I found that, and people are going to hate for me, like, people are going to hate to hear this, but, like, order blocks for me were just, like, how I drew my zones before with one or two more parameters that qualified as high quality or low quality. or high probability and low probability. So that's kind of how I just transitioned. It wasn't ever like, okay, I'm transitioning from supply and demand to SMC fully. It was
It's just an overlap anyway.
Yeah, it was overlap.
Do you utilize, because a lot of SMC traders do, but also a lot of traders don't, going down all the way to the M5, M1 timeframes, the lower timeframes?
Yeah, I trade, actually, a lot of people don't do this a lot, but I trade the 1 minute time frame a lot, like just with my model, because I chart so I basically look for a higher time frame narrative that could be on the daily or hourly, and depending on if it's on the daily or hourly, I'll move on to the 15-minute time frame, and I'll look for, you know, a fair value gap to the markets trade into, because I trade IRL to ERL. And then once it does that, I drop onto a 1 minute time frame, and then I look for SMT and an order block to form, and then I take it from there, which is kind of like really different from how I used to trade. I used to be like, okay, I hate the 1 minute time frame. I'm only taking trades off the 15-minute, and now it's like I only take entries on the 1 minute or 5 minute.
The word you said, the word you said was SMT. I refer to SMT as smart money trap. What do you mean by SMT?
Smart money technique, right? Where there's just a divergence between ES and NQ. So
one's making a high, the other's making a low.
Yeah.
Okay. And what kind of lower time frame models do you have? Is it just this divergence, the SMT, or do you have various ways?
I want to see I want to see the SMT happen, and I want to see, as it happens, an order block to form. So the market forms an order block, and order blocks come in so many different shapes. It's like something that I qualify as an order block. Some people might be like, okay, that's not a high probability order block. But for me, as long as I see an order block and we trade into it, it just offers a good risk to reward that I can actually take and just go from there.
How are you defining an order block?
I want to see,
maybe different to others.
So if there's, and I'll do this in a bullish scenario, if there's 3 consecutive red candles, and then we have a candle close above those 3 consecutive red candles, and it's an impulse move, and those 3 consecutive red candles, the one at the very bottom swept the previous low. Okay. So there's a sweep, and then we have consecutive candles. I'll consider that an order block, where most people...
Those 3 consecutive candles, the fourth one engulfs all 3.
Yeah.
Oh, okay.
So
leaving a gap, leaving the imbalance.
Yeah.
Okay.
So that's what I'm mainly looking for, and I'll draw it on all 3. As if there's consecutive candles, I'll draw the order block off the consecutive candles. What some people will do is they'll only draw it off the candle that swept the low, and they'll have their entries all the way down there. For me, that's where I'm usually keeping my stop losses, at the very bottom of that candle that swept, and then the consecutive candles I can just start scaling in from there. Or I just wait for the market to show a reaction. Because a lot of times what a lot of people do is they'll enter a trade and they'll be like, okay, we're trading into this fair value gap. They just set a limit order, and it fills their limit order, and next thing you know, it knifes right through it. Right? I always wait for a reaction to happen before I ever even enter a trade.
Are you utilizing on the lower time frame breaks of structure, or are you just waiting for the sweep and engulfing?
I'm not waiting for, I'm not entering off the engulfing, right? I want to see us pull back. So that engulfing usually is going to break structure.
Got it.
So as long as there is like bullish signs, and like if it trades back into that order block, and I'm not seeing a wick start to form, or I'm not seeing buying pressure start to come in, I'm not going to take it immediately until I start to see some sort of buying pressure come in.
And you mentioned also IRL, ERL, internal, external range liquidity. And you mentioned sweeps. So I understand you're looking a lot around liquidity, and then also reactions after that liquidity. What are you denoting as liquidity? What are the categories you have, and do you weigh some as more important and less important, or is all liquidity the same?
I wouldn't really say one's more important than the other. For me, like, external range is just previous highs and lows, and that's just what I'm always targeting. If it's equal highs or equal lows, then I add a little bit more oomph to it. But if it's just regular old highs and old lows, that's what I just define as external, and then internal is just a fair value gap.
Okay. So if I was to kind of summarize what I'm understanding, is you're taking your supply and demand from your initial days, and then you just kind of utilize smart money concepts for more entry types. So then you get into the session, you're looking for a sweep and then a lower time frame model.
Yeah.
What about because I think this is a very understandable model, and a lot of people I think are around this area. The key between those that are doing that and maybe not making money, and someone like yourself, I would imagine, maybe correct me if I'm wrong, is around your risk and profit taking systems, or how you manage a trade. Are you doing something particularly different within that? So out of the dozens and dozens of prop firms that exist in the whole space, who can we really trust? Whether they use slippage, whether they use types of drawdown, unrealistic trading conditions, every single prop firm has hidden tricks. So after thorough research and speaking to a lot of traders, Alpha Capital is definitely the best prop firm in the space. So apart from their no commissions, low spread, no slippage, great reputation, never denying a payout, because you are a Titans of Tomorrow viewer, you get a special discount on every evaluation just using the link or using the code TOT for Titans of Tomorrow.
I think when you're just trading on the 1 minute time frame, I think a lot of people, they trade this when they say lower time frame, they're saying 5 minute or, you know, even 3 minute, 2 minute. With the 1 minute, what you're getting is you're getting a chance to get a really precise entry with really good risk to reward, because your stop loss is very, very small compared to what it would be on the 5 minute. And with that, you're able to get a really good risk to reward ratio. And I think that's a big difference maker in between unprofitable traders and then profitable traders in this specific model with lower time frames in general.
Meaning risk to reward will carry you through. We'll do the heavy lifting.
Yeah.
What are you targeting in terms of risk to reward per trade?
Every single time, I mean, minimum is always 2 to 1.
Okay.
I know people who do 1 to 1 and they're good with it, but for me, it just doesn't make sense, because if I'm going to be entering, I want to be looking to make more than what I'm risking, not even just break even, because I like having that security of knowing that even if I lose half of my trades, that I can still be profitable. I think that just helps me just stay a better trader, because if you're constantly looking to just have a high win rate and a low risk to reward, it's like there's so much pressure on you to like not lose. Every single time you're taking a trade and you lose, I feel like it's just mentally taxing. Whereas if I lose with this, I could lose 3 trades in a row and I know 1 3R trade is going to make that all back. Whereas if it's, you know, you're trading 1 to 1 and you're looking for a high win rate, you lose 3 trades in a row, you're going to be clawing your way to make, you know, that money back. And that's where, you know, you start blowing up accounts.
Well, it's interesting because a lot of traders that I've also met, I'm more on this side of the spectrum where I think risk to reward, there's a balancing act, but I think risk to reward should do the heavier lifting. But others have been like, I like to do a 1 to 1 or a lower risk to reward and a high win rate, because if I have a series of losses, because the high risk reward traders have more losses, that becomes more of a mental tax, as you said. So it's interesting per person how that deviates. When it comes to
every trader is going to be the same either. I didn't mean to cut you off, but just like everyone's always going to try to compare each other's journeys. Like, okay, you know, like people who watch the podcast, they're going to be like, okay, this trader does this trader does this. And there's just so many different ways of trading. And what that should show everyone is just like, once you find what works for you, just need to stick to that. Because if you try, you know, being like someone else, it's never going to work. I mean, you look at this, like Umar's probably the best trader I know, right? Probably one of the most transparent, best traders in the industry. It's like, I tried his strategy, right? And I know for a fact it works because this guy's putting up 50, 80K, 90K days. When I try it, I'm not having the same results. I'll see the same thing. I just can't execute it on the same way. So when, you know, some people, they prefer lower risk to reward and higher win percentage. It's like, it really just comes down to the type of trader you are and the type of person you are. It really doesn't matter. I don't think there's one that's better than the other. It just really comes down to what's better for you. And for me, it's just, I just like having that sort of safety net of knowing, hey, I can lose a trade or two and I'll be good.
You know, it's an interesting point you mentioned of equivalent strategies, and obviously we're assuming understanding the strategy entirely. Then you have like a lot of communities where they have a lot of good members and they've understood it. They've been with that community for, let's say, a year or two, but they just can't get the hang of it. But the proof is there. There's others in the community that are profitable, or even the founder of the community is profitable with undeniable proof. What causes that difference? A lot of people say that's just psychology. Other people have other explanations for it. What would you denote the reason for that?
What I would say, if someone's in a community where everyone else is profitable and they're not profitable, not everyone's going to belong to a certain community, right? It's almost like it comes down to, it almost turns into like a religious thing, right? You see a lot of people who are in different communities, like, you know, the people who still use indicators, EMAs, they're going to ride or die for. I literally saw someone today who took a trade off the 9 EMA and got 400 ticks and made probably like 300% on SPX today. And then they're like, oh, for all the people who say indicators suck, it's like people become really emotionally attached to these certain groups and communities. And honestly, I think if something's not working for you and you've given it an ample amount of time and you can say you've given it your 110%, then sometimes maybe that strategy is just not for you. You could find success somewhere else if you've given it enough time. And I always say don't strategy hop, but there's got to be a time where you're like, okay, this isn't working for me. Like, I'll explain it like this. When I first started, everyone was trading support and resistance and levels. I never could get the hang of levels. That's why I started trading zones, because I don't know what it is with me. I just like having that kind of just like wiggle room to play around with. Like with levels, it's got to be super precise, super this. With supply and demand, it was like, okay, there's a range I can trade. There's an area on the chart I could trade. So, I mean, the reason, circling back to the question, the reason I feel like those people don't find success when everyone else is, I think it just comes down to them and just their personality in trading, right?
If we are to kind of put it into categories, I know you've had members come through too. Can you kind of predict what kind of a style of trader someone should be based on their personality? If someone's I don't know what you would identify. Let's say someone's particularly shy, someone's particularly aggressive, someone's very loud, introvert, extrovert. What kind of characteristics would you link to certain trading styles?
I wouldn't link their certain characteristics. I would link their environment mainly, right? So I'll give an example. One of my friends, his name's Avery. His main thing is he has a really good job, and he wants to get into trading. He's been learning. He's been putting in a lot of work for a year or two, and he just hasn't found success. And what it took for him to actually find success was moving away from day trading and looking for swing trading, and actually looking into swing models rather than intraday models. And that's what really made him a better trader, and I think setting him on the right trajectory, right? If someone's trading and say they're in high school or college and they have roommates or they live with their parents, it's like they're not going to be as dialed in as someone who lives by themselves, who makes their own rules, who doesn't have to hear constant banging in the back. And the only reason I say that is because I was in high school trying to trade with my mom yelling at me from downstairs while I'm mid-trade, right? So I think your environment impacts you more than just your personality. I wouldn't look at someone and be like, oh, he's a shy person, he should trade inverse fair value gaps. Like I don't think of something like that, right? But I think environment will impact you a lot more than just your personality. And when I mean personality in trading, I'm not talking like if they're shy or something. I'm just saying just how they go about, trading in general.
I want to circle back to a bit of the technical stuff we were speaking. So you mentioned you're aiming for like a 1 to 2 risk to reward. But it sounds like you're also getting a very small stop loss based on the 1 minute or 5 minute time frame. You're able to get a rather small stop loss, and then just with the session volatility in London or New York session you're trading, you can have a sharp move up. So are you cutting the trade quite short in terms of the impulse of the session or the impulse of the day? But it seems like you're not catching the whole thing. You're looking to just catch a 1 to 2 fix kind of thing.
So there's obviously one-off scenarios where if I go on to like a 5 minute, I'll catch like a y'all catch 300 ticks like I did I was telling you about earlier. But it's like normal day to day, if I could catch 50 to 70 ticks twice in a day, that's good enough for me just based on my size, right? So I'm not targeting super insane like price targets. It's like if it moves to a previous high, even on the 1 minute or 2 minute, I'll be able to just take it off there. And I always go by the saying, I'd rather have a small piece of a big pie than a big piece of a small pie, right? And that goes for business, that goes for trading, that goes for everything. And I think Umar was the one to tell me that as well, because there was a time where I was trading, and when I was alerting for free on Twitter, I would always try to go for multi-baggers. In options, I was always trying to get over 200% on plays or even SPX. Okay. I would be up 140% and I wouldn't take profits, and I would watch that position go red. And I remember there was this time I was talking to Umar, and I was reviewing my trades with him because I was just losing so much money at that point. And he was just like, bro, this trade was up 140% and you let it go down 80%. Like, what the fuck? I'm like, bro, I wanted to see 200%. And that's when he told me, and I was like, okay, that makes that, like, I can understand that. It's like, I'm kind of stupid sometimes, right? So hearing things in like a child like that made a lot. Part of your journey to learn. The pies made a lot more sense than like the actual risk to reward sometimes.
So actually, speaking to Umar a lot as well, something that he is a strong believer on is modifying your risk, based on if you have your A+ setups, doubling down on setups that are good. Also, as the year goes on, if you've built a good buffer up, scaling up your risk as time goes on. What is your beliefs on risk management, or are you just stable fixed risk the whole time?
So with options, it was definitely how he said it as well. I would build up a really big cushion, then I would be able to size up more. Now that I'm trying to switch to futures, I found what's best for me is just to keep a strict, like, 1% per. I'm not risking more than 1% per trade. Like, just the regular rules that everyone follows. Just because I'm so, like, not new, but like still trying to get my feet with futures and try to go full time. But with options, it's definitely first 3 months of the year I'm going hard. I'm trying to get 30-40K months, or I'm just having a good size. Especially after April is when after taxes and everything, I'll have like a good idea of like, okay, this is how much liquid cash I have.
Okay.
This is how much I have in my brokerage. And then this is what the goal is for the year. I won't ever set like a dollar goal. It'll always be like, I'm trying to have this many green weeks. I'm trying to keep it at a minimum. It's never like a dollar or percentage goal for me. It's always just trying to stay afloat and look to trade the next day. So building up that cushion is one of the most important things, especially even with futures. I think if traders focused on just building up a cushion with, and I'm not talking prop firms here, I'm talking like regular live accounts, if they just build up a really good cushion, they'll see that their trading gets exponentially better just because you have a safety net. And that's like the best thing you can do for yourself.
You mentioned, well, actually, first of all, what I'm realizing is you've had a few resets in your career where you went from a supply and demand kind of, or maybe even support resistance to supply and demand, to then SMC, to then options trading, now to futures trading. These movements that you're having, or changes in approaches, is that unsettling for you? Or, you know, you're kind of back to square one, or is it always feed into each other?
I'll say it like this. With the options trading to futures trading thing, it was mainly because Umar was like, oh, yo, I'm going to try futures so I could skill heavier. And I kind of just went head first into futures. And then slowly all of my options trading friends started transitioning over to futures as well.
I've noticed too, but what is causing that shift?
I think just being able to utilize prop firms for a lot of these people is very attractive, like not having to risk your own money. But also at the same time, I think everyone just got super tired of being in an SPX position. And I remember me and Kiflo, like I used to be in the back of math class in college with a $40,000 SPX 0 DTE. I'd be up 20%, and then immediately, you know, there's two big green candles, and then there's the smallest red candle that would kill the premium, and then I'd be down 20% right after. I think people just got tired of the extreme volatility and just the games that were being played and just the options overall. And it's not to like, obviously there's always going to be someone you can point the finger at, like, oh, the market makers are doing this, like they're fucking with this. But at the end of the day, that's the risk you take with options, right? You want leveraged gains, you're going to have, you know, bigger losses as well. So with options, I feel like and the main like switch that really did it for me was right before I turned 10K into 230K in 2 months. A lot of people don't know the story of why it was 10K in specific. It was 12K, but the 10K just sounds better. But the reason it was 12K is because I had withdrawn like probably like 300,000 from my account, given it to my parents, had around like 60K left in my trading account. And then in one Friday, I blew it from 60K all the way down to 12K. Oof. And then obviously I'm not going to be, this was the first time I ever gave my parents like a huge amount of money. So I was never going to be like, hey, mom, hey, dad, remember that 300,000 I gave you? Yeah, I need it back. Like, I didn't have, and that was like literally all the money I had left. And that was when I had to like really, when you said reset, like that was one of the big resets for me. So once that year ended, that was into the end of 2021. What ended up happening is that's when I really started, and that's right around the time I got introduced to SMC. So it kind of like flowed into each other. It was never like, okay, this didn't work, now I'm doing this. It would be like, all right, it was like very slow transitions to where it's like, I really couldn't even tell you a specific time or month when it was like, okay, now I'm starting this or now I'm doing this. It just kind of flowed into it, especially with my strategy, how it overlapped with order blocks. It's like it never started off with, you know, a 1 minute time frame entry. It was always, you know, I started looking for order blocks on the hourly. I would only trade those. Then I would go on to a 5 minute and then slowly just learn new things and just add it to the arsenal until I found something that was comfortable for me.
Talk to me about, I think it was 2021. It was the year you kind of had your first big year. And you've mentioned now that you had slow transitions. It was not like big resets in terms of, you know, your knowledge and adjustments in strategy. but 2021 seemed like a big year financially. And the year before, I'm not sure what happened, but was it a significant jump year to year, or was it a...
It was, I'll put it in terms of this. My goal for that year was to make $50,000 on the entire year. And I was like, and the reason I had 50,000 in mind, because I was like, okay, that's how much my average teacher would make, because I was just coming out of high school onto my first year of college. And the world is still shut down going into 2021. GME is going crazy. These little penny stocks are going crazy. So end of 2020 into 2021, I was getting really, really lucky on a lot of like penny stocks. I got really lucky on GME, Fubo. I got lucky on just a bunch of like smaller cap stocks, to where my account went from like, you know, $3,000 to $30,000 to like $40,000. And then by the time it was mid 2021, around June, I had a really, really lucky play where I hopped in to a trade, and that went like probably like 300-400% that same day. They had news come out. In a single
trade.
Yeah. Gosh, and what my thought process was, and this is when I'm trying to think, I'm 22 now. 3 years ago, I was 19. So I was 19 sitting on like $40,000 in my trading account, and I was like, okay, I have 40,000. I'm like, I only put in 3K into the market. So I'm like, I have around $37,000 that I can lose. So when I had all that money in my account, I was like, and I became really comfortable with the idea of like, if I lose everything, I'll still be break even. Like, I'll still be green because I have 3,000 in my account. And I just started sizing into trades exponentially heavier. So it's like that one trade that took me from 3K, and then it went like 300%. I made like 12K on it. The next day I made 30K. And then after that, like my account's sitting at 6 figures. I still just kept that mindset like, yo, if I lose everything, I'll still be green, and it's just the house's money. And this is such a, like, it's such a degenerate mindset now that I think about it. But I was 19, and I really don't have any excuses for myself. I was just sizing in super, super, super heavy.
But I find it so interesting because I have a friend, Wally, and he has a very similar story. Before he got sensible, let's say, with risk management stuff, he had a good run, and he attributes it to luck. He had a lucky run. He was just following some guy's signals, and the guy's signals were not even the best, but he was just asleep at the right time and stuff. So he just caught, I think, 12 trades in a row that were just wins. And he was risking like 80%, 100% of the account each time. So he went from something very small, I think it was like 1K, to 100K in the space of a few weeks. Yeah. And he was also that age, like 18, 19, something like that. And then the 13th trade got him back, and he blew the whole thing. Yeah. And when I speak to him about that story, it's like, what were you going through? Like, you got 100K, that would change. And he was working 2 jobs at the time, and that was a lot of money for him and his family, and you could have just solved a lot of things. And myself in that situation, even if I was 40K up, I'd be like, I'm good for the year. It was almost my target. You know, I'd sit back, be more conservative and reserved. What is it in him and also yourself that is like, no, let's keep going. Let's see how far we can take this. The first thing that I actually started was drop shipping. So as a dentist, at the time a dental student, I started an e-commerce drop shipping store called Pearly Dent. And the go-to platform was Shopify. And the reason I used Shopify was because it was an all-in-one solution. I could get my payments sorted there. I could do my email marketing. I could do my website building. I could do customer fulfillment. Everything was in one place that it made a new entrepreneur starting that journey a little bit easier. So because you are a Titans of Tomorrow viewer, we have a special offer where you can sign up for a $1 per month trial at shopify.com/Titans. So go to shopify.com/Titans to start your first business now, no matter what stage you're at.
Probably pure greed, I would say. I was really greedy. Like, I would say, you know, after seeing that much of my account, I'm like, okay, this is what 100K looks like. I'm like, imagine what 200K looks like. Okay. I was like, it was so easy to get 100K. And it's also at the time where it's not like I was like an anomaly. It's 2021. The markets are doing the craziest things they've ever done. GME is rocketing up to $400. You know, like short squeezes are happening in everyday stocks. It's like, when this is happening, it's not like everyone's just doing like how the market is right now, where everyone's just getting by or, you know, just doing all right. Everyone that was on Twitter, everyone that was even in Discord chats, like people were making $3,000-$4,000 a day. So I just thought it was I just thought it was regular. Okay. So I didn't really think too much of it. Like, if it was now and I was like 19 and I did again, I'd look around and I'd be like, oh, dude, people are I should probably take this out before I lose it. Back then I was like, oh, this is a stock market. This is never gonna end. I felt like Jordan Belfort. Like, I was gonna buy a Lamborghini Countach.
So what I find interesting is just watching a bit of your YouTube videos and your life story. We're from different parts of the world. We've had a completely, separate upbringing, separate community, everything. But my family life and your family life seems kind of similar with the Asian parent background.
Yeah.
And that year specifically where you've made an incredible amount of money at a young age, but I'm sure they were still saying, hey, go get a degree, go get a good education.
Yeah,
kind of
100%.
Talk to me about those days where, now you're, as traders grow up and you make your own money, you get your independence. But at that age, you're still under your parents' roof and what they say goes, and also the respect boundary, all these things considered. So how was your life shaping? Because I think a lot of viewers are in that situation where they're young, they're hustling, they see a lot of people online doing it. They feel like they can do the same thing that they did, but their environment, their parents, their friends, it's not making it so easy. So how did you navigate those days?
So with my parents especially, like my dad was always like, okay, at least he's doing stocks and not drugs, like at least because it's like at least he's not drinking, doing this stuff, like he's doing something productive. My mom was like, oh no, you're giving him too much freedom. He's gonna drop out of college. He's gonna do this, and it's like I always just had her chirping in my ear, and I love my mom. It's not like, oh, my mom was my biggest hater. It's like she doesn't know any better, right? It's like when you're a brown kid, especially from raised how we were raised, you're raised around a lot of people who are well respected. They're in the medical field, they're in engineering, they're in respected fields, and your parents don't want you to be that one person who's not respected, who's not well off. They want to make sure they do their best job as parents to make sure that you're well set off. So I always knew in the back of my head, I'm like, okay, she's just looking out for me. It's not like somewhere of malice. It's like
it's always from love. It's always from
exactly.
Love,
I have to give her a reason to believe me, right? It's like at that time she was like, hey, this could all be luck. Like maybe this is like your time to get out. And I was like, yo, maybe she's right. Maybe I should go. I was in pre-med at the time. I'm like, okay, maybe this takes care of my college fees and I can actually go about it. And I always knew that I wasn't going to go into the medical field, and if I was going to, it was only going to be for my mom, and she was never the type to force me into the medical field, but I always knew that's what she kind of wanted. So that's what I went into. She even told me not to do it because she knew I didn't want to do it, but I went into college. It's not like I had bad grades either. I had like a 4.0 my freshman year. So granted, I paid a lot of kids to do my homework and stuff. I didn't earn it. But
fair enough.
I'm a lot of people, they always want to be the first, they want to blame their failures on their parents. Like, oh, if my parents believed in me more, blah, blah, blah. It's like they believe in you to an extent where it's like that you don't even believe in yourself. Imagine you're coming from, India or Pakistan. You barely speak English. You come here, you work really hard jobs, and you get a small apartment, then you move up to a small house, and then you save up money for years to put your kids through private school or put them through, college. And then they're like, okay, I don't want any of that. I want to do this instead. They're going to be like, okay, why are you doing that? It's like we set everything up for you. You have a clear path. Yeah. And it's like, especially if you're losing money too. I was losing money for 2 years before that run ever happened.
Were you open with your parents in those days when you're losing money?
No. I would lie to them. I wouldn't. My parents, when I was losing, they didn't really ever, they didn't know that I was trading how I was trading until I handed them a check for $50,000. And then my dad kind of always knew because, the Amazon packages at the house started getting more expensive. Like, I started getting PC parts and stuff, and I started upgrading my room a little bit. And so they knew I was making money. They just didn't know how much. But once they found, once my mom can tell if I lost money or made money I would be on the phone at college in my dorm room. She'd be like, you look like you lost money today. I'm like, how the fuck did you know? And she's like, I can just tell the look on your face. Yeah. And I'm like, this is how it is. And much as you try to hide it, in the beginning days, you definitely can't hide it. It's like, it's affecting you. You're like, okay, what can I do better? What can I not do better? It was to the point where one day I was so mad because I was up $6K during the trading day and I was at college. And then I ended up losing $16K that day because I was walking around trying to trade, try to show off to these fucking idiot friends of mine. They were like, oh, yeah, enter a trade with 20K. I'm like, all right, fucking, I'm going to enter. And I ended up losing that day, and I was so frustrated. And my mom, she was like, you don't look right. I'm coming to pick you up. And I was like, no, I'm chilling. And then she never let me stay in the dorms again.
You know what I find interesting is I've had a few guests on who have a similar story of very young age, making a lot of money in a very easy way, more to luck because they were just figuring out that, things were aligning. Later on, they developed a full-on strategy. But in those early days, a lot of money is floating. They're not closing it. Like you said, you're up 150% or so forth. And you're also working a job. Maybe at the time you weren't, but in your backstory, I remember you were working 1 or 2 jobs at certain points.
Yeah.
Was this at the time you're also floating a crazy amount?
No. So this is right before. So I was working DoorDash, and I was working at a gas station overnight. That was in 2020 during the COVID days because, so this is what was happening, right? During COVID, a lot of people were getting unemployment, meaning that they were getting paid a lot more from being unemployed than they were actually working their jobs.
Okay.
So my dad, the gas station my dad works at is a family-owned gas station. It's not his, but it's, my uncle's and, my uncle, not my, so they're my dad's cousins. They're not his brothers, right? So his cousin's dad's gas station. So he's working there. And all the employees there, you usually need 2 people there minimum, one inside the store, one outside to pump the gas. And because in New Jersey, people will come up and there's 10 people who would actually tend to you. And basically what would happen is all these people they would hire would literally file for unemployment, and then they would get paid double what they were getting paid working at the gas station, pretty much.
That's crazy.
Right? So my dad, at one point, they were like, hey, we don't have any other person working. You're going to have to work here almost 24 hours. You can shut down the store whenever, just keep it as open as long as you can, just do whatever. Because no one knew how to run the inside of the store, because it's when trucks come up, big trailer trucks, you have to be authorized to actually, charge them for what it is. It's not like someone goes and pumps the trailer's truck, those big trailers. It's sometimes they have I'm getting too deep into how gas stations work, but basically my dad was the only one qualified to work, and no one else would be able to fill in because the other person was on vacation and he was stuck because of COVID. So what ended up happening is that I had to start working with my dad during those COVID days. And the reason, and this was a big a big motivation for me, was, I'll actually send you a picture too. My dad was sleeping in the corner of the gas station. I actually showed Kifo the day we went there. It was a chair with this, when packages come with a little not styrofoam, but a little foam. He had that as his headrest, and then he had his feet propped up on a bunch of cardboard boxes, and he's just in the corner sleeping. I looked at that, I'm like, bro, I'm a fucking failure, bro. My dad worked all his entire life just to be in a fucking corner of a gas station sleeping on cardboard right now. That to me, and the reason it hurt so much is because I remember my uncles, the day before I went to Six Flags, which is an amusement park, and he was there with his kids, and I was like, yo, if only we had a little bit more money in our life, bro. Me and my dad could have had more memories when we were younger. So just things like that, and that's really what motivated me a lot to just take it super serious. And even with the floating profits and all that luck stuff, it's all the money I made went straight to my dad, and that was that.
We spoke a little bit about transitioning to futures, and a lot of people going that way specifically because of prop firms, and that's it's a very easier access for newcomers. Now, prop firms in the forex markets, at least, is quite a mature situation. It's been around for 7-8 years, I guess, and a lot of changes have come in the last 1-2 years, where the rules are more and more favorable for the trader, and everything's in the trader's favor because there's so much competition. There's so many firms around. And naturally, that's led to people doing bad business and then going under. But, there's maturity in the market. Whereas in the future side, it's still quite a new thing. So is it still tough to navigate with the rules and the things they put into place, or is it quite a stable place?
I think it really just comes down to the price of things, right? If you want better rules, you're going to have to pay more. So with my funded, I'm not going to say, names and stuff because, ACG is sponsoring this podcast. But,
you're all good. You're all good.
But there's accounts and there's firms where it's you pay a premium and you'll get better rules, but also at the same time, the profit target's a little bit different. Everything's a little bit different. Whereas if you pay cheaper, if you go with the obvious Apex, it's they're $30 if you use a code, and then you have to pay an activation fee at the very end. It's like, it just depends on how much you're willing to pay in the futures market, especially. I think the best thing to do is just take the top 3 big futures firms out there, Apex, Top Step, My Funded Futures, and just write out which, like, 50K account, and just write it out side by side. What rules match your personality the best, right? So it's like, do you like trailing drawdown? You don't? Okay, then go with this one. And like, payout threshold, this, and this, and really write it all out, and then look at the price difference. If you have enough money, like if you have more than $10,000 in your bank account, then just go with My Funded Futures expert accounts. Those are probably the best ones, especially like the 50K account I would recommend. And it's like, it really just depends how you are as a trader and how much money you're willing to spend.
Are you someone that is still utilizing prop firms, or actually in your journey, and they were not a thing in the beginning?
Yeah,
so,
no.
Have you ever utilized them, or has it always been personal?
I've tried them out for the most part, or I've tried them out, but I prefer using live funds, just because I like knowing that the money I make it's mine, and not, that it can be denied later out. But I've definitely bought 20 accounts, copy trade them together, and then try to come up big and treat it like gambling. But it was never something that I personally felt like I needed to use a lot. Like, I prefer live funds over that any day of the week.
And if you were to do it all again, start again, and starting this year, would you take a similar approach that you did, or would you go straight to prop firms?
I think with prop firms, it promotes a lot of degeneracy, and I think and this is kind of a hot take. I think it promotes a lot. If it's not done correctly, it promotes gambling, right? Because people will be like, okay, I could buy this account, blow it, buy another one, blow it, buy this one, blow it. And it's like, that's kind of how I treated them. And that's the only reason I say that is I'll trade an account, I'll pass it, and then right before it's about to get to a payout, I'll try taking a big trade to like just be a complete dickhead, and then reset it. It's only $100. I'll reset it, and then I just treat it like gambling. And I think that's what a lot of beginners do as well, because I'll see sometimes these new beginners, it's like when they're showing their screenshots of their evals, it's showing like the numbers like 300-400. It's like, you bought 300-400 of these accounts. It's like, wow, you're going crazy. I mean, also because a lot of people are buying 20 accounts and copy trading them. But I would, if you have money and if you have the means and you have the patience and you have the time, I would always recommend live funds. But if you're just starting out and you have the discipline and you have the right framework, then go ahead, use the prop firms, and then use the payouts you get to actually fund a live account. Yeah. And that's the way to do it. But you need to have that proper framework. You need to know what you're getting yourself into. You need to know, okay, this is the model I'm going to trade. This is what I'm going to stick to. And I think that's the best way to go.
That the word you used was a gambling approach with prop firms. Others have just said, like, I go aggressive, whatever the way to word it is. But I think everyone understands it's just like, it's not your money, so make the most of it. It's a situation that might not be around forever. But as you said, it also builds bad habits, because if you're doing that for 3 years, your new norm is a reset button in the back of your head. And when you get to a live account and that's not the situation anymore, it can be quite detrimental. Would you still recommend like a more aggressive approach? Because I've seen a lot of traders on the show that have been aggressive and kind of just said, I'm playing the risk reward of not of a trade, but of the evaluation fees to payout ratio. And it's like, as long as I'm up on that ratio, I can keep buying. And I had Pasquale, for example, he's a trader from Germany. Mm-hmm. He spent over 250K on challenges, but he made like over 2 mil.
He also
so the risk reward was also
peaks,
there,
right?
Now he owns Funding Peaks, yeah. So a lot of these traders are just playing the risk reward of the challenges, and then the moment they have a bit, then go to a live account. And it seems like that's the only way you can break out, because if you're just stuck in trading it in a sensible way with risk management, you won't ever get those big payouts that are enough to actually fund a live account. What would your judgment on that be?
I think it's definitely possible to have proper risk management, get consistent payouts, and then build a live account from there. I mean, one of our friends, Ralph, day trading Ralph, he's very consistent. He'll get like 3-4K payouts every bi-weekly,
and they add up. Yeah,
and they add up. He's probably gotten paid out 20K just last month, and you could go into My Funded Future, search up his name, and it's there. It's verifiable too, and he takes that, puts it into a live account, and trades that, and he's traded that 20K probably into 30-40 by now. So it's like on the month he's up 40K, right? I think it's just a different approach, right? If I was a little bit professional, I wouldn't say it's a gambling. or it's a gambling approach. I would have called it aggressive too. It's a better choice of wording. But, you know, I think at the end of the day, it's also, you know, just that degeneracy that's just built within prop firms, right? Because it's prop firms function because of degeneracy.
They also need actually.
Exactly. So they need that sort of degeneracy, and that's how they promote it as well. If you're not super careful with that payout to, you know, fee ratio, you'll end up on, you know, the more degenerate end. You're going to end up being the person who's keeping these prop firms alive. And you have to be super, super disciplined when it comes to prop firms, because I feel like it's a lot. Like, people don't understand how much you've spent on prop firms until, like, 99% of people don't do the math until they've gotten a payout. There's probably so many people out there who haven't gotten a payout who spent 30, 40K without even knowing over the course of the year. And they're like, oh, shit, like, I could have just put that into a live account and tried trading it, and it would have been better off.
On a side topic, because I know you're big on Twitter, I saw it this morning. Do you see some guys up like 600K on a single month on FTMO on the leaderboard?
I didn't see the FTMO one. I saw one on Apex who's up like $1 million something. He got paid out $250,000. His name, okay. I think his name's Trader Kane. Is it Kane? Yeah.
The FTMO one is crazy. It was when the crash that happened over the weekend and there was blood on the streets on Monday. Some guy's up 600K, so he played it right. So everyone's like, is FTMO going to pay? So it's an interesting one because, you know, even the 50K payouts, some firms can handle it, but 600K payout, that's a big one. I want to bring the episode full circle to wrap up with talking about your parents and the family life you have now, because we're talking about the gas station and the come up and the struggles, let's say.
I almost cried during that part, bro. Why are you bringing it up now?
As a trader, it's very simple. You have to find an edge, and then you have to have a mind so you can follow that edge. But how do you know if you're performing correctly or not? You have to know your data, and TradeZeller is going to show you everything that you need beyond the surface level win rates and performance and equity curve. It's going to show you detailed reports. It's going to be your back testing tool, strategy testing tool, playbooks, notes, and it's going to be a full journal. It makes your journaling easier, faster, and more meaningful. Whereas if you were just documenting it on an Excel spreadsheet or taking screenshots on your iPhone, you wouldn't be able to pull out the data that you need, the correlations that the AI within TradeZeller is pulling out for you. There's so much variety and utility within the software that I think it's essential for any trader. So the link somewhere below is going to take you directly to the TradeZeller website. I'm not getting paid. This is for you. If you want it, if you like it, go ahead and explore it, and probably you'll be using it for years to come.
I want to talk about now the good times. Let's say, you know, you've obviously helped your family a lot, and it seems like you're very generous with helping them out. So what is the beliefs now? Because a lot of specifically Asian kind of kids right now, they're watching with the same relatability. That's how my situation is right now as yours were. Trying to give them hope, say, look, this is what it's like on the other side of it, and maybe how your parents understand everything now.
Yeah, no, my mom still hates it. I actually, when she was actually really right. My dad gave me an inch and I took a mile. I dropped out of college. So she was right the entire time. She'll say it to my dad to the day. She'll be like, you know what? If it wasn't for you, he'd still be in college. And I'm like, Mom, relax. Like, dude, it's still like my mom's retired now. You know, thank God. You know, it's crazy to say that because I always used to, like, my dad would have to work from 6 a.m. to 6 p.m. and then my mom would work from 10 o'clock at night to 6 in the morning. Okay. And it's like, so I never really, like, during my childhood especially, like, I was raised by my mom, obviously, because my dad was doing the heavy lift. But when my sister came into play and then we needed more money to run the house, it was like we could never have both parents at once. So now that my mom's retired and I cut my dad's hours in half, I would retire my dad, but he doesn't want to. He likes working there. He's like, what? Like, what would I do at home? And I'm like, I don't know, relax, learn how to play golf or something, like retire. He's like, no, I'm good.
It's all they've known. Work hard and that's what
and then he just loves having that routine. So I mean, it's good for him. He only works from like 6 to like 1 o'clock now. There'll be days where I'll wake up and then he'll be coming home from work and I'm like, dude, this is the best. Like, I get to see, like, it was even the day I met you the first time. That day, as we were leaving, my dad was coming in, and I was like, dude, this is so great. Like, he's just here during the day and not when it's nighttime, because over here, like, during daylight savings, it gets really dark really early. But, yeah, my mom's still the same way. She's never going to change, but, you know, she understands it a lot more now. And your parents are never going to really, like, fully grasp onto the idea, I don't think. You just need to show them results, right? Once you show them results and you show them it works, that's when they're really going to just start to accept it a little bit more and more and more. But yeah, like even my mom, bro, she was retired for like 2-3 years now. And Kiflo was talking about it too. Like literally 3-4 months ago, she was like, you know what, I'm gonna get a job again to see how it is. She's I'm bored at home all day. So everyone says I don't work, I don't do this, and I'm like, yeah, because you don't fucking have to work. So fuck what all the auntie are saying. And she's like, she goes to work for a week. She's like, yeah, I'm not going back. She's already quit. And I'm like, see, like it's hard to go back to that. But
what I found interesting was when I was younger, in that same situation where my parents don't get it just yet, I thought the moment I could show them money, they'll get it. They'll be happy. And that was wrong, at least in my case, where the money didn't actually change their opinion. My dad a little bit more, but my mom couldn't care less. She's still like respect, pride, the status, all of these things of having a good degree.
Your parents seeing you now, like, you know, host, like, be such a prominent figure, like, I think they respect that more than any amount of money.
I was just about to say, yeah, it was not the money that has changed anything, and you know, I've been making money for a good amount of years now. In fact, even at uni, more than a dentist. So I thought these things would make them proud, but it was never about the money. But when they see I'm building something, and they can just, like, for example, just watch the show and show, you know, their friends, like, look at the trailer and this kind of. My mom watches the episode first. She's always in the live premiere. She's always so.
My mom's the first one. My mom was the first one to look at Instagram stories and my reels. She's like, "Oh, you made 9,000 today? I saw your video," and I was like, "What are you doing?"
Fair enough. Well, brother Shinobi, thank you very much for coming on. It was a good episode, and I'm going to be back in New York very soon, so we'll hang out again and get some.
No, we'll go to a trampoline park.
Nice, with chocolate milk.
With chocolate milk.
There you go. Cheers, bro.